The ASX has launched, as we know, a new book build facility, and it says that this is going to broaden the number and range of investors who can participate in setting the price of new shares. WAM Capital was the first listed company to use it with a placement this week. Let's get some more on how it went, and also some strategy tips as well on what WAM Capital's doing in terms of investing and navigating this local environment at the moment with, of course, the debt ceiling overhang. We've got WAM Capital Chairman Geoff Wilson here with us. Geoff, always great to see you. Thank you so much for coming on the show. Firstly, tell us about why you decided to be the first to go through this new system, the ASX BookBuild.
To me, it's an amazing system. From my perspective, it's just like the evolution of the equity market. It's another way of efficiently raising capital. I mean, why is the equity market there? It allows companies to raise capital in the primary and the secondary market, and I think it's fantastic the ASX has embraced this new technology. I mean, if you go all the way back, say go back 100 years, you had a system where brokers would meet in a room twice a day, someone would call out the names of the stocks, and then when the name was called out, they'd buy and sell those shares. Then we went to the open outcry system, which finished in Australia in 1987, and everyone said then, and we went to electronic trading, and everyone was saying, oh, what a disaster, it won't be the same. And to me, this is just embracing, you know, the latest technology, and really to reduce the cost of raising capital for companies, which is incredibly important.
How did your capital raising go?
Well, it exceeded our expectations. Why did we do it? It was really to get as broader access to the whole market, or as many sophisticated investors as we could, and we achieved that. We were only expecting to raise $15 million, and we ended up having to upscale it, I think, by a little over 60%. So it was around just a little under $25 million we raised.
In terms of the, as you mentioned there, it was open to sophisticated investors.
Yes.
Why not retail investors just yet? Can you see that coming?
I would think it would be fantastic if retail investors could get access to it, and it's just really, that's more a government ASIC. I think it comes back to Clerk 1 when they came in there. For some reason, they thought they were protecting retail investors by not allowing them to access placements, and unfortunately, I think they're disadvantaging retail investors. And our listed investment companies, we've got 15,000 odd retail investors, and we would love them to get direct access, to these opportunities.
Oh, there have been the critics, of course, already. I saw some reports of bankers reporting the Australian seeing red, saying that it shouldn't have been allowed to have a two-day trade halt for the book build. What's your sort of answer to that, and these accusations that maybe there's two sets of rules here? What do you think? Is that just the bankers perhaps feeling this is threatening their business?
Well, first of all, there's not two sets of rules. The ASX has their rules, and from WAM Capital's perspective, if we didn't have a trading halt, that didn't concern us. The reason we asked for the trading halt is we didn't want a situation that, say, retail investors were buying on market and the sophisticated investors were buying at a lower price and selling and taking advantage of those retail investors. The retail investors are incredibly important to us, and so we didn't want that situation to occur. So I actually think the ASX decision was the right decision. If their job is to protect all investors, including retail investors, it was. But if they hadn't given us the trading halt, we still would have gone ahead with the book build, because we thought it was a worthwhile objective, or a worthwhile thing to do. In terms of the bankers, to me the tough thing is when there's ever anything changing, people find it hard to change with the technology, and I understand there's always the people, the doubters and the negative people. With the internet, we had that. I mean, remember Y2K, how the world was going to blow up. That never occurred. So we always have those type of people, and in 2 or 3 or 4 years time, we won't be having this discussion. And for the banking industry, for the investment banks, to me this is a phenomenal opportunity. Really, it's about companies raising capital at a cheaper price. The incredible thing is, in Australia over the last 5 years, I think companies that have raised capital via private placements have raised them at an average of a 9% discount. Now, that's a lot of money you're taking from current shareholders and giving to those new shareholders. So if you could raise if you have a more efficient system, if you're accessing the whole market, and it's allowing you to raise money a lot closer to your current share price, then that benefits the company. The investment, you still need the investment banks. The investment banks or the brokers are an integral part of the capital raising process. And you still need them involved and charging their fees for the work they do. And then this is another system that allows you to access the whole market. So to me, I think it's a win-win-win for companies, for the investment banking community, and for the ASX. And to me, I take my hat off to the ASX that they've come forward with this sort of, well, it's not only Australian first technology, but it's actually world first technology.
I wanted to get your wider views too on what you're seeing in the market. I know WAM Capital invests in smaller to medium-sized, undervalued growth assets. How difficult is that to find at the moment?
It is difficult. I mean, we're carrying about 25% cash, but in terms of our position, probably over the last 15 years, we've averaged a little over 30% cash, so we're more invested. Short term, I'm bullish. In terms of what's happening in America, I mean, before we came on, you asked me how do I feel about it. Incredibly scared because of the risks, but I'm confident that sanity will prevail and they will work through it, and we won't go over the cliff. So I'm pretty confident from that perspective. Over the next, I would say, I'm short-term bullish, but early next year, I actually think the market has had an incredibly good run, up 30-odd% in the last 15 months. The market's forecasting the economy will improve next year. I think the market will be higher into January, but we probably will be a net seller.
Okay. So in terms of where you're looking then at the moment, I mean, would there be anything that you would look to pick up, say, if there was a big correction, or would you...
Well, in terms of where we're looking, there has been, obviously with the change in government, confidence levels have really improved at the top end, corporate Australia. The question is, has it flown through to the consumer? We know lower interest rates has helped housing, so we've actually got good exposure in the building stocks, brickworks. We saw them the other day. They had a good, they're having good price increases, and the demand has increased significantly. So anything relating to housing, our exposures are, say, brickworks, Villa World, Sunland, Divine, those type of companies. They have had a good run, but we think they'll continue over the next bit. We're trying to work out companies that are plugged into the consumer, say the retail. We still think it's pretty difficult out there, very patchy, the feedback we're getting from companies we're talking to. We're also looking at some of those companies. I know the guys are in Melbourne at the moment, seeing some of the computer services, technology companies, the likes of the Oaktons, the SMXs, just to see if things are picking up, the outsourcing started to pick up. So we're just trying to work out companies that will benefit from the new stable political environment.
But you're confident that the US, that there will be a deal reached, won't default?
Exactly, I am.
Okay.
I'm incredibly scared that they will, but I'm confident they won't.
Okay, good. All right, Geoff, as always, appreciate your time. Thank you so much.
Thanks, Bridie.
Geoff Wilson there from WAM Capital. Do stay with us. We're taking a very quick break here on First Business.